There are some massive key factors that you need to pay attention to as we head into 2026. Everything is coming to a head. So I'm going to break down those key factors. I'm going to share with you exactly what I have been doing. I'm also going to peel back the curtain on what. So number one, some key factors you need to pay attention to is they started the QE machine, which is quantitative easing. We were in quantitative tightening for a very long time. The quantitative tightening started because we were in a low interest rate environment and they printed a ton of money during the pandemic and they had to slam on the brakes and raise interest rates because of inflation. Without doing anything, you lost about 24% of your purchasing power from 2020 going into 2023. So your financial advisor says you're making 6 to 8% on your investments or doing a good job. You're actually not even treading water. And I'm here to tell you that it's about to get worse when it comes to the devaluation of your currency. But here's the good news. You can do something about it. There's only interest in the system. I want you to picture an interest symbol. The little line with 2 dots. You're either earning it or you're paying it. That's it. There is no real money in the system. America's at 120% debt to income ratio. Japan's at 500% and China's at 300%. So you see what happened in Japan today. They're raising rates from 0%. They've steadily been raising rates because they're heading into a free fall. But here's what's going to happen in America beginning of 2026. So these are the key factors. So number one, they already turned on the printing machine, quantitative easing. They're forcing banks to buy bonds. Now, how the Ponzi scheme works in America is our Federal Reserve, who's not Federal nor Reserve, prints money and buys our own debt. Then they sell it to us as a safe investment on the bottom of the risk pyramid. So they print magic money and they buy debt and they sell it at interest. That's what keeps the Ponzi scheme going. So first, they started printing. So that's devaluing your currency. Next, Trump has said with trumpets that he's going to bring rates down as low as possible. Now he's going to be bringing in the new Fed chair, making the announcement very soon here. And they're going to bring rates down as low as possible. Again, devaluing your currency. Your currency has already dropped 96 to 97% since the Federal Reserve was created in 1913. So what it's going to look like and feel like, because they're going to lower interest rates, is that it's going to look like there's a bunch of growth. Because the middle class and working class is going to monetize their debt. They're going to refinance, they're going to buy bigger houses, bigger cars, iPhones, flat screen TVs. The problem is that's not real growth. That's burying us deeper into the system and trapping us even more. Here's what's going to happen. The middle class and the working class is going to monetize so much debt from 2026 because it's going to be very cheap to 2029. Things are going to get really expensive because the value of the currency is going to go down. Then you go back into inflation. What's going to happen is the wealthy is going to become exorbitantly wealthy from 2026 to 2029. There's your hint. Remember the interest thing, the line, a little symbol? You're either making it or you're paying it. There's your hint. So what I work to do is I work to earn interest. I work to create cash flow, not income. And I'll explain the difference. Income is what you get paid for trading time for money. You get paid in income. That's someone else's debt because there's no real money in the system. Debt must be monetized to keep the Ponzi scheme going. They have to lower interest rates or the system will fall off a cliff. So they have to lower rates. We have to monetize debt. So you get paid in someone else's debt. My income is your debt. Your income is my debt. So I get paid in someone else's income and I take that income and my first thing is I take 10% and I put it in dividend stocks that create cash flow, passive income. I take my income from my active businesses and my cash flow from my dividends that are passive. I transmute them into A. It's called capital DR, A, which is assets. I don't care what asset you buy. What you need to learn to do, listen to me, beat inflation. That's all you need to worry about. So I want you to study what assets will beat inflation. Gold, silver, Bitcoin, for me, XRP. I'm focused on fixed supply assets. The system has always been the same, guys. This is nothing different. It's not a super cycle. Markets go up, markets go down. Over 200 years, there's been over 30 major